we are in a typical dull market rally. Look, we have not had any volume or action or volatility the entire year. So we know that money flows into the markets on a regular basis every day. So we're pushing the markets higher. Listen, there's nowhere else for anybody to invest right now. You can't put it in a CD. You can't put it in the bond market. So if you need to chase yield, you're going to come into the equity markets. So the drift higher will continue. Now, again, I think that the recession has already begun. Now, we know economists won't tell us from 10 years from now that this was a recession, but there's a lot of warning signs out there. And the first one is the Fed's inability to want to raise rates here because the true free markets can tolerate higher rates. If you go to a true price discovery model, if you look at all the peer-to-peer lenders, you look at all the third-party lenders, they are having no problem lending money at much higher rates. And then, of course, those companies are selling the loans back to the banks. So when Steve Mnuchin has to come out and give us a warning that the banks are in good shape and everybody's telling us what great shape we're in, to me, that's always a warning sign. You've got some inflation problems. You got the cost of commodities getting crumbled, yet the cost to input and put those back in the ground are going up dramatically. So there's a whole bunch of problems that nobody wants to talk about because why? Well, the markets are at record highs.
Okay.
So why worry?
All right. Well, here's the thing. You're giving me cause to worry. At least it sounds like. You're saying basically by default, there's really no other place to go if you want yield there. I would throw this back at you. Well, if you're waiting for if you think the boat's going to be hitting the dock pretty soon, you're going to want to be jumping off rather than staying on. And then, what's wrong with cash right now?
Martin, I never believe in being cash. One thing is I believe in is being hedged your portfolio. But if you don't know how to hedge your portfolio, let's look at one certain fact for sure. I may think that the markets are going to go into a recession. I might think there's going to be a big sell-off, which I do, of course. But I'm still long the market waiting, and my investment account will always be long. I don't sell from my investment account because I understand that the markets go up about 8.5% year over year, every year. So I expect 10 years from now in that horizon, the markets will be higher than they are today. Cash is never a good investment because, of course, when you have the Federal Reserve involved and central banks around the world continuing to devalue that cash that's in your pocket and offering secondaries on your own money, it's never a great place to be. So people are being forced to chase yield, and especially the people that shouldn't be in the market at this time in their life, that are close to retirement or at retirement, looking to get yield because they want to live the same lifestyle they lived before. So they're forced to chase in to the market because where else can you go? Again, it goes back to the same story. When you put everybody on the boat, on the same boat, eventually that boat will hit an iceberg. But for now, I mean, again, the Dow has not made a new high. I firmly expect that to make a new high. The only index I think will not make a new high is possibly the Russell, but we've already seen the S&P and the NASDAQ have already done so. So we're seeing much higher movement. And of course, I think the stronger dollar also sends out warnings because everybody likes to talk about the VIX as the fear gauge. But a stronger dollar is where a lot of money flows when there's concern globally with the economy. And the dollar made fresh new highs again today.